Okay, welcome to the deep dive. Today, we're cutting through some of the noise in global finance. We're looking at an asset class that seemed, well, pretty quiet for a while, but now it seems to be roaring back. Our mission. A quick deep dive into UK prime property. Because interestingly, the data is suggesting prime central London is maybe regaining its status as a kind of safe haven asset. I mean, look around, global markets are choppy, right? You've got the FTSE 100, the S&P 500, all reacting to U.S. trade tariffs, those mixed messages from the White House. And cautious investors, they're running for safety. We've seen gold hit record highs, for instance. But yeah, property seems to be the real comeback kid, according to our sources. So the big question, the mystery we want to solve is what specific things are actually driving international buyers back into, let's face it, very expensive London real estate, especially after years when the market was pretty flat. Okay, let's try and unpack this.
Right. Well, I think you have to start with the most obvious thing, which is price, just the sticker price. According to the data we're seeing, prime central London average prices are currently about 18% lower than their last peak. That was back in mid-2015. So that's like your baseline discount right there.
Okay, 18% down from the peak. That's significant on its own.
It is. But here's where it gets really fascinating, I think. It's the currency angle.
Yeah.
Because the pound, GBP, has been relatively weak against the U.S. dollar. Overseas buyers, particularly those using dollars or currencies pegged to the dollar, they get this compounded relative discount. Compared to July 2014 prices, it works out as a relative discount of around 37%.
Wait, hang on, 37%.
37%, yeah. It's a huge difference.
That's massive leverage if you're coming in with dollars. So are we talking strategic buys here, or is it more like a fear of missing out rush?
It's definitely driving a rush. We're seeing, significant flows of buyers, particularly from the USA and the Midwest. The U.S. buyers, who benefit most directly from that dollar strength, actually accounted for almost 6.9% of all prime central London buyers in Q1 2025.
Wow.
Yeah, that's the third highest figure for U.S. buyers in 10 years.
Mm.
And look, the value is the main draw, but the shared language probably helps too, right? Makes U.S. buyers feel, well, at home, maybe.
Okay, so the currency story is really strong. But the sources we looked at also point to something, well, more counterintuitive.
Yeah.
A political thing, the so-called Trump effect. The analysis suggests President Trump's trade policies, which you'd think might weaken the UK economy or at least cause instability, are actually boosting the prime London property market. How does that work?
It's a crucial connection. It works like this. The tariff turbulence, the uncertainty it creates, it fuels market expectation. The expectation is that the Bank of England will have to cut interest rates proactively,
Right.
to shield the UK economy.
All right, to support growth.
Exactly. And we're already seeing that expectation priced in. People are talking about a potential 0.25% rate cut, maybe even next week.
Yep.
And that anticipation immediately pushes down longer-term borrowing costs.
Ah, okay. So it's the expectation of rate cuts driving down current borrowing costs.
Precisely. You want specifics? We can look at things like the 5-year SONIA swap rate. It dropped to 3.7% last week. Before the tariff announcement back in March, it was over 4%.
Okay, I see.
That drop is really important because it makes financing UK assets cheaper for global investors. So in simple terms, yeah, Donald Trump's policies have indirectly put downward pressure on UK mortgage costs.
That's quite a dynamic. It really sets London apart, doesn't it, when you compare safe havens? So connecting this to the bigger picture then, why London property over, say, gold, which is also seen as safe?
Well, a couple of reasons are being cited. Unlike gold, which, can be harder to generate direct income from.
Right, no rent from a gold bar.
Exactly. And its peak value is always a bit unclear. Prime London property, on the other hand, is seen as relatively cheap right now because of those discounts we talked about, and it generates rental income. Plus, there's a perception issue. The UK is still seen as, well, relatively politically stable compared to maybe the Eurozone, which has ongoing structural economic challenges, like weak growth in Germany, for example.
Stability and relative value, then.
That seems to be the core motivation. HMRC research actually highlighted that about 42% of overseas buyers specifically see UK property as a safe investment. But, and this is the important caveat, it does raise the question, what does safety truly mean in this context? Experts are rightly cautious. There's absolutely no guarantee prices won't fall further. Also called safe havens carry risks.
So wrapping this up, what does this all mean for you, the listener? This safe haven comeback story in prime London properties seems to be driven by, well, a perfect storm. You've got these deep currency discounts meeting Trump-induced mortgage rate cuts, which are really driven by that anticipation of protective economic moves. plus this perception of UK stability compared to shaky global alternatives. What's really interesting here is that market safety isn't just a passive thing, it seems as being actively, maybe unintentionally manufactured by these big geopolitical forces. So here's a final thought. How does knowing these specific mechanisms, like how a US trade tariff can ripple through to impact a UK mortgage swap rate almost immediately, making assets cheaper, how does that change how you view volatility, not just in property, but in your own portfolio and your own financial plan? Something to mull over.